When looking at long-term investment charts, you might see a logarithmic scale. Here is why that matters for your perspective. A logarithmic scale is all about proportions rather than just raw dollar amounts. It helps us see percentage changes clearly. On a log scale, the distance between 1 and 10 is exactly the same as the distance between 10 and 100. This method prevents massive historical gains from looking tiny compared to modern prices, giving you a more honest view of growth. A linear chart is great for daily price moves, but a log chart is the standard for analyzing multi-decade market performance. Notice how the exponential curve becomes a straight line on a logarithmic scale. This makes identifying consistent trends much easier. Remember that a log scale does not tell you if an investment is good, only how its growth rate compares over time. Check your brokerage settings to toggle between these views. Thanks for watching, and stay curious about how markets work.